Hello guys. Good morning, or should I say good afternoon? So, we'll be going into the video. We'll be going into what we have for today, and yeah. So I'll quickly turn this off for now. So for today, we have institutional order flow. This is what we're going to be discussing literally all through the next coming weeks, and also to answer to the request of everybody in the class, we are trying as much as possible to see if we can finish up everything in this particular month, all of the teachings for this particular month. So therefore, so we're moving straight up into institutional order flow. Now when we talk about institutional order flow, we're talking about the large pools of orders into the market, entered into the market by the huge financial institutions and banks. By that, we mean the world banks, the commercial banks, and the prop firms. Those are large institutions that move large funds, world economies as well. Actually, these ones move their money through the world banks. Now, what we're discussing in this particular section is how smart money actually moves money in the markets. Okay, but that we're talking about the institutions. Now, in the foreign exchange market, it said the market is mainly moved by the larger transaction sizes controlled by these organizations, and they are the ones who mainly move or control the market. Since the bulk of the move in the market is controlled by the big banks and institutions, we try as much as possible as not to trade against them so as to ensure that we remain profitable on the long run. So quickly, what we'll be doing for the rest of our lives as traders is basically understanding what smart money intends to do. Okay, so what we'll be doing for the rest of our class is understanding what smart money has in mind to do. And for right about now, I believe I believe we have been learning, and we quickly did accumulation, distribution, manipulation for our last class, and that's what we are still going to be working on today. Now, what happens majority of the time is when the prop firms, the large institutions, impute this order, they purchase a currency and it pushes the market up. Majority of the time, they are going to be retail traders. They're going to be someone on the sideline who is trying to make money. That person could be me and you, the retail traders, and we see this full upward move happening. Now let me clean off the top. Now what will happen most of the time is that this person would want to take part in what is happening here, and they will most likely start entering their buy orders just here. So what most of the time, as the big banks, these institutions see that they want to, them on their own end, want to actually place more buy orders. Now, when these people are placing buys, what they will do is they will sell off some of their positions to these people. Now, as they are selling off some of their positions, these so-called buyers coming in late are expecting to see the market move upward, right? But instead, what would happen would be the complete opposite, as instead of going up, the market would begin to retreat back down, and that will leave these men in the dust. Now, meanwhile, while this is going down, we're going to have some other retail traders who feel that at this moment this should probably promote to the downside, who would also be wrong at the same time, and the market would most likely just go down, and these guys will be entering sales here. And meanwhile, while this continues going down, they will be in profits. But what could most likely happen is the fact that the market continues upward, and automatically these guys would be in a loss. If any of these guys are still in the trade, they would most likely be in a profit right now. But for as long as they are no longer in the trade, because this would be a deep loss for them and most of them would have closed their buys, then the market goes back up. So these guys are selling to the market. The institutions will buy from them and continue pushing higher. So what do me and you do as smart traders? What we basically do is understand what is happening here. We understand what is happening here. So the moment we have an understanding of what the banks are doing, we can actually take an advantage of what we know. So we basically take advantage of what we know, and then we come in here and we are monitoring, we are just watching the market, we are following them in what they are doing. We know that eventually, provided that this market is bullish, that price should not break this region. We know, we understand, we are working with an understanding that price should not break this region. So us as smart traders, instead of trying to buy here or trying to sell, we can even sell here. There are smart traders that would sell somewhere in here. I keep drawing very, very broken lines, sorry. There are some who will sell in here, hold it, and when it's here, they would sell off, they will close off the sell. And in our case, in order to be on the safer side, we would most likely be waiting for the market to return to this area. This is where we would attack the market. We'll take the bull by the horn, and we'll basically, this is where we will be waiting for the market, and provided we get what we are looking for, this is basically where we would most likely be taking our own buys. Okay, now with that said, I've basically touched down on what we do as institutional order flow traders. Now moving on, we trade with the institutional order flow. When we trade with institutional order flow, we learn to anticipate what direction the larger institutions intend to drive price and trade alongside them. And then moving on, we have IPDA, which is the interbank market delivery algorithm. Now back to the board. Now remember, we mentioned that these big institutions are the one moving price, but actually, for us to have a better understanding, what actually happens is that these banks are not the ones actually always moving the market intentionally. Okay, there is an algorithm which is known as the interbank price delivery algorithm. So this algorithm is fully in charge of moving price. Okay, moving price, moving the market. So the charts you see every day is moved by this algorithm. The banks, the Fed, the National Reserves, these guys all move their money. Okay, like the US is a reserve currency. We have a reserve currency of Japanese. Sorry, the Japanese yen is also a reserve. They all have their reserve. When these countries move money in their reserves, what happens is that as they move money, this algorithm is able to understand what affects their movement of price, what they are doing with the money. This algorithm is able to understand what it means and is able to fully show it in form of a chart. Okay, it's fully able to understand them and completely follow through with what's happening. So us as traders, what we do is we try as much as possible to understand what the algorithm is doing at every given point in time, take advantage of that and trade alongside it. Okay, more on if that would be done, but like I said, for today I have 3 videos to actually do. One for you guys who are almost ending the section, and one for the newcomers, because their section is going to be a whole lot more different from yours. So moving on, moving on to what is most important for today is the PD array. I was supposed to name this PD array, which is premium and discount array. Okay, this is the one we'll most likely be practicing. I only said something on IPDA and institutional order flow just so that you can have an idea of it. So the main thing we have business with today is this one, optimum trade entry. How can we use it? Now we have 2 scenarios here, one for a buy scenario and one for a sell scenario. So whenever the market pushes up or down, we should draw, most likely you'll be doing this using a tool known as the Fib. a Fibonacci. So we are going to be pulling our Fib from the most recent low to the highest level. This should be done when the market is already retracing. Okay, now when we do this, we want to mark out the region known as the 50%. Okay, everything from 50% to 0 is our discount, and everything from 50% to 100 is our premium. Now when we have this kind of scenario, what we'll be watching out for is to see the market retrace back into discount before we can take buys. While in the case of a sell, when we draw from the top to the most recent low, from the most recent high to the most recent low during a retracement, like I said, this must happen during a retracement. Then we wait for price to come into premium before we sell. So in the case of buy scenarios, we're waiting for price to come into discount and then we sell. And here we wait for price to come into premium. Now let me quickly give you guys what it fully means. When you go to a store and you want to purchase goods, most times you want a discount. You want to buy at a lower price, right? Now, when this market is currently at pricing here, it's not that it's not good to buy. You can buy here, but most times we all want a discount, right? So we want price to come deeper into an area where we can actually save more money and get more profit. So that's what it means to buy at discount. And then for selling, we have what we call a premium price. Remember, we all have a premium price. When you go to a store, you have a standard price and you have a premium price. When you buy at a premium price, it means that you're getting more quality. Okay, you are getting the goods, you are getting a much higher quality of goods. So same thing here. When we are selling a an asset at premium, it means that we are selling at a much higher price to get a better profit target. Okay, so the names are things you should just have in mind, and this would always help you in the chart. So how can we actually use this? For this, I feel we should now dive onto a chart, an actual chart, and actually work this out. So I actually had a simulation I was doing in here, but I highly doubt if it's going to continue playing forward. Yeah, it refused. So I would most likely quickly set up a new one for us. So I'll be doing let's put $5,000 as that's what we're looking to get for everybody for a start. And I'll be doing GBP USD. Here's 1 minute data. So I'm going to pause this video and come back immediately I'm done setting up this. So we basically just started loading the software. I'll be right back the moment it's done. Okay, guys, so we are back, and as you can see, this is our software. We are ready to actually start trading now. So I'm going to adjust this a little bit down, so then put this on open positions. This is where our trades are going to be showing when we take a trade. Okay, so now quickly, what we're going to do is, when you want to use this, the time frame you decide to use it on is completely up to you. Yeah, it's completely up to you. But for me, what we are going to be doing quickly is working with everything that we have done so far. So far we have done trend, and currently from this one we can see from here, from the left, very left, you will always start your analysis from the most left, please. You can always adjust. If you're on the daily time frame, then this is 2017, and we are actually working on 2018. So what I will advise you to do is get a crossbar. You should see something like this on your MT4. Sorry about that. I'm coming. Let me close off something. I'm trying to see if I could like shut down that program and fully focus on what we have here. Is making the system glitch. Okay. Okay, so I think that has gone. So what I would advise on the daily time frame, step one, ensure you have like 1 year worth of data. So we are actually working on, if you look at the bottom here, somewhere at the bottom here, you see the date. So this is 30th of April. So I want to have like 1 year of data, or at least 2 years, or at least 2 years at most. So this is 2018. So 1 year of data, this seems we won't be able to get that much. Let's see if we can shrink this chart so as to get 1 year of data. So yeah, this is 1 year of data. This is May, this is April. So from here, you want to, from on the daily, we are able to understand what is going to happen most likely for the rest of the year. So we're going to quickly mark up our structures in now. So I'm most likely going to be discussing some of the things that we're going to be doing on the next section here. But for today, I'm going to do just what we have learned, which is trend, right? So quickly, I'll put on my polygon, and starting from the lower bottom here, we see an uptrend with accumulations and distributions on the inside. And straight from there, we broke this low, we went down, and you see distribution, accumulation, distribution, accumulation, distribution happen here as well. And from there, we pushed up to this area, and as you can see again, accumulation, distribution, accumulation, distribution, accumulation. And then again, we push up, we push down, and you can also see minor manipulations happening on this side, and another upward push. Now at the moment when we have this, now we have broken this high, created a higher high, created a higher low, and now we've created a new higher high. So this automatically tells us that yes, price is in an ascending format, meaning we are currently in an uptrend. So we create a higher low here, minor structure high, retest this low, this is a double bottom, and then we push up forward in here. Then we have this low and a double top. So we didn't break this. As you can see, they are quite equal, and now we have price looking like it's about to push down. So what do we think? Just working with this, I don't want to complicate this. What do we think is possibly going to happen? For me, I feel price might actually push quite down a little bit, make a deeper push, and then skyrocket to the upside. That's just me, what I think. And then from here, it could probably push up. From here, it could possibly, it could possibly push up from here after that. So for me, I'm actually anticipating a downward move, and then we're like, where exactly could this push down happen? So for me, I feel this most recent high here and this low here, they just quite line up a little bit. So I feel price should probably find its way back to this area before pushing up. Okay, this is just my anticipation, clear anticipation, but we are analyzing the market. So now we understand that probably the market is still in an uptrend, and then from what we are seeing here, for us, or should I say for me, I'm expecting to see price come down in here. But where is price currently? Price is currently in these lows here. Is it? Sorry, I did a mistake. This was like this, Abby. This how the chart was. I pressed my space bar by mistake. So as you can see, this is what we are looking at. And I said price might actually push down. So now what we will do is we'll push down to the lower time frame. Okay. And from the lower time frame, from here we can still pull up the pulley line and draw in what is happening currently. Okay, and then from here we broke the high, broke the low, downtrend, and then here we have a very strict uptrend, and then here from here we had push down, minor high, push down, minor high, push down, minor high, push down, minor high, and then push down as well. So right now, from what we have drawn in here, the most recent high happens to be this area, and the most recent low happens to be here. So this now gives us what we can draw with. So what we'll do is we'll pull up a fib. I think I would pull out my indicators for this one. Now if you look in here, we have this guy here whose name is fib retracement. So you want to find this one in your own charts, and when you click on it, I clicked on this, we go from the high and we draw to the bottom. Okay, so I've actually edited mine. You can always right click if you're working on a system, or hold it till a pen shows. If it is your trading view, just click on it. You should see a settings button that you should click and edit this. Please do this with your trading view so that it's a lot easier. Now when you edit it, I want you to probably clear out all the levels and leave just these ones I have here. As you can see mine, leave just this one, although this is supposed to be 72, sorry, 72.0. So I'll change this 72.0. It's supposed to be 72. So this is what it's supposed to look like. So now from here, I said from 50 down here is discount, and 60 up here is premium. Now in the case where we have a downtrend, what we are looking for is for the market to push up into this area above 50 and then sell. Okay, that's what we're looking for. Is it going to happen? We don't really know, but if it happens, it's fine. So now let's just play price forward and see if we get that. Well, as you can see, it did not happen. It didn't happen. So what do we do now? We'll delete this, move this. As you can see, we have something like a retracement happening somewhere here. Wait for that to be clear. As you can see, we're pushing up now, so we can actually draw to this area, and this is what we have currently happening in the market. And let's see if we can get to 50 now. The market is still in a downtrend, right? We're not getting what we're looking for, and now we'll just stick around. What we're really testing now is premium to discount, just premium to discount, and I'm not getting clear structures, but let me quickly use what we have here on the lower time frame. Let's use what we have here on the lower time frame to explain. Now if you look in here, let's use this area where it broke the low. After this one broke this low, this one broke this low. So we have from this high to this place. If we draw in here, okay, you want to use this after the low was broken. After the low has been broken, I can see this low was broken. Okay, this low was broken, so we can pull from this high to this low. Now, if you take your time to actually, sorry, to actually trace this, you see it follows exactly what we explained. Price moved from the low, it came above 50, and you see how we just dropped down. Okay, now let's do the same thing for this one, from this high to this low. You see in here again, price came into above this, and you see how they keep respecting 72 and 61. So these are the areas I marked out because of how well I see price reacts to them. So for now, let's see if we can get something like that again happen. So I have something like a retracement, so we can work with this high to this low now, and we are waiting for, okay, I think we can sell that now. I think we can sell that. Stop loss just above 72, and we hit a sell. Now let's see if that works. Mind you, we are not using any other thing special. We are just working with premium and discount. Okay, just premium and discount, nothing else. Now, as we continue on with the class, as we forge on, we will still have more and more things to discuss, more and more things that you should add up when you are looking for a trade. But for this particular section, we are just working with just premium and discount. just one thing out of everything, and I'm showing you how to implement it. This, you can use just this one alone to trade. So we have gone break even. We have gone break even on the trade. The trade has gotten back to this low. Now let me teach you something else. Whenever you do something like this, always target. We have TP1, TP2, TP3. Okay, now whenever you have your trade in, always target your first low, the low, which is your zero. This zero is TP1. Sorry about that. What was that again? Is it Control T? So this low here is TP1. That's our TP1. TP1. Okay? That's our TP1. And then another thing you can do, for me, I feel you can actually measure from this low to 50% of the full movement. That's from here to here, half of it. Just cut out half of it and move it to where your TP1 is. Use that to find out TP2. Okay, this should be easier to do on your trading view. So we can change this now to TP2, and you can still repeat the same thing to get TP3. And mind you, it's not a must that the market must get to these areas. This is one way to actually monitor your profits. For me, this is one way. Then another way is using your FIB, your risk to reward tool. That's another thing. You can use risk to reward to calculate it. We'll do more on that later. But we were working with a risk to reward tool. We were risking we're risking 0.5 lots, and I've forgotten where our stop loss was, so I can't really use this later. I believe we were quite above here before. That was where we put our stop loss, right? So that's about open price 13339. Don't want to bother my head too much now, but let me quickly calculate the stop loss so I know how you use your risk to reward to 5.8. So we're risking about 25, I think about $25 on this one. Sorry. So if we were to use sorry, let me pull out my risk to reward. I've been confusing myself a lot and it's making this video drag. I used to set this risk to reward in here is not functioning the way I love. So I had to reconfigure my Fibonacci tool. There's one known as Fib extension. I had to reconfigure this one to get it. So for me now, this is my risk to reward though. It's quite stressful to use. Sorry, I ended up moving that one up. This one I wanted to edit here. Now the way we use this is we'll move these dots to the place we entered the trade, and you see how that one just lines up with our loss. So we'll extend this. Now I feel the chart is getting too small, so let's make it easier to see. Let's make it a lot easy to see. I'll be deleting these levels. 70, 80, 90, 100. What's going on? I think we'll do more on this later anyways. So TP1 hit. We'll just watch. Let's see if we can get to TP2. If we don't get to TP2, it's fine. For now, I believe my stop loss, I should recover there. Now, if you look down here, we have 306, 350. That's like 7%. 7%. Our balance is $8,000. So in this kind of thing, I would most likely TP2 hit. So we'll close part of the position. For me, I think that's what I'll be doing here. Closing part of the position, and we have 0.5, so we'll close 0.25. We're closing 0.25, and this TP2. We actually just showing you the power of one tool that we have discussed in the class. I feel price might be retracing here, so I will just close out in here. But instead of closing out, I think I will just use this tool to understand what is actually happening here. Let's redraw this back here. You see, it has gone past 72%, so that means this market would go up. We'll close this. We'll close this. So now let's try using this tool again for a buy. Now I'm not saying that this market is going to buy you, sorry, but I'm going to use it for a buy. Why do I think it would possibly buy? Let me tell you. Now you see we have been coming down, and in here this is the most recent low to the most recent high, and we just pulled our fib. Sorry, I can press F to actually activate my own, so please don't think about it seriously. So since this has broken above 72, which is our highest region, it has been broken above 100. As you can see, it's above 100. So what we will basically do is anticipate for a buy and say, okay, so instead of pulling from the high here, we're pulling from the low for a buy, from the low to the top. And now we're looking to see if we'll get price come in here. And if it does, we will look for a buy. If it doesn't, we'll keep quiet. Okay. Now we see price reacting to these areas here. I'm not so sure, but let's just work with our risk to reward to this time around. We'll be using our balance, and we'll be risking 1%. So if we enter a buy just here, stop loss just beneath this low. Okay, this is the buy we are entering now, and stop loss, I'm using this low here as my stop loss. So stop loss set, targets, send them high. We don't know how high it's going to get, but we're going to use that as our stop loss anyways, and then we'll place an order just there. So I'm going to leave this for now. Let's see if we get triggered. I need the market to come down and touch this place. So this is the problem we're having with this risk to reward too. I couldn't enter the buy direct by myself. Sorry, I'm going to push back price. This risk to reward to made us not take the buy we wanted to take. I'm going to slap in the order by myself. Stop loss just here. B. Calculate with 1%. We're just buying there. So this is the order now. We'll delete this one. Pending order. We'll delete this one. So that's the order now. Let's see. Let's see how this goes. So now some people will be like, this trade, is this actually the main trade? I had to place this by myself now because of the issue we had on the last one. So let's see how this goes. Let's see how this goes. So we have actually established a simple way for you to trade now. I've established how to find the buy and how to find the sell. If you are looking for a trade, so as long as it doesn't go past 72 and retraces, then you can take the trade. Okay, stop loss just below 72, and in the case of a buy, stop loss should be above 72, and in case of a sell, sorry. So now we're watching this. Let's see if it actually plays out. I don't know if it will go. Okay, now we have had price create from here. This was a higher low, higher high, higher low, and push up. So now we can move our stop loss to break even, and you can see we have profits of $92 running in here. So quickly, this is a nice one, 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 and as you can see, is actually still going in our direction. This is nice. So this is basically what we're going to be doing. So I've given you tool number one and a trading strategy for you. Trading strategy number one, a way to trade number one. And I think with this one, everybody should be able to do something on their charts and make money this week. Okay, keeping it simple and still making money. It doesn't have to be always too hard. Keeping it simple. See how we're keeping it simple and we're still making this money. Anyways, is beginning to chop around, and the time here is actually 18, or should I say 19, 2000 is midnight. So I don't think I'm comfortable holding this anymore. So we're most likely going to be closing this trade. It's already $100 up. I'll just close the position there. So that is it for today. We closed our position just, sorry, let's zoom out, zoomed out too much. So as you can see, we were targeting price coming back in up here would have given us 221, but it seems we won't be getting that. We closed somewhere in here with 109, I think. So that is that for that, guys. It can only get easier by the day. So you just have to start up and give it time. Practice makes perfect, ain't it? So this is the trades we took. This first trade